Hey traders, welcome back. This is our weekly trading preview and market analyses for the week of June 13th, 2022. Okay, let's just jump right into it here. A lot of stuff happening this week. It should be a pretty busy week for us, I'm going to imagine. And we talked about this last week, the end of the week, the last couple of days of trading. It really was a perfect scenario for us in terms of just encouragement for the type of market environment that we like. And that is just simply volatility. We don't really care what direction the market moves. In fact, we talked a lot about this extensively on Thursday and Friday's trading sessions, how I actually prefer down markets because, again, we're traders here. And whether you're in our AST, passive investment portfolio, that doesn't matter. That makes money as the market goes down. As traders here, we don't care if it goes up or down. And generally, the moves are bigger to the downside than the upside. So everything being thrown in there and looked at, we would rather really have the market being in a downward trend. And it certainly looks like it's going to be accommodating for us right now. I'm looking at the weekly statistics here. Again, in our live trading room, we of course look at these technical indicators, these 12 technical indicators, and then the dual overlay with moving averages. We look at them on a daily basis. This is a weekly period right here that we're looking at, and pretty much all across the board is a very strong sell signal. We don't have, we'll get into our support and pivot points here in just a moment, but we don't have a lot of areas of support that we can find right now when we draw this down and look at a daily figure. But anyway, back to a very strong bearish trend. We've been in a sort of a wedge pattern for quite a while here, and we haven't been able to break it out. It was interesting that Thursday and Friday of last week, we went through probably a 8 to almost 9 trading day window of nothing but inside candles, just absolute no movement at all right in here, just inside candle after inside candle. And we talked about this wedge that was being formed here and how that wedge always resolves to a breakout. Markets work in two different ways. They either consolidate or they distribute. And we were in a consolidation mode for a very long time. We knew that there was going to be a break and a distribution. We just didn't know which direction it was going to go. It did break, and we had the biggest two-day sell-off since March of 2020 over Thursday and Friday's trading sessions. So this is obviously a big week for the market. We've got FOMC minutes coming out on Wednesday. We've got Powell speaking, and then just another FYI for you, this coming Friday, this is going to be another triple witching expiration cycle. It's the second triple witching cycle that we have had of this year, 2022, and almost always is a good ingredient for a little extra volatility, if you will. So from a market perspective, again, I think that we just formed this perfect wedge pattern here. We knew that we were going to need to get a breakout. We didn't know when it was coming. We traded very cautiously. We were very, very disciplined on Thursday and Friday, just sort of waiting for that to happen. And in fact, it did happen. And so that coincided quite nicely for us in terms of how we approach the market. And it resulted in a really, really big week for us last week. If you watch the weekly review video that I put up yesterday, you'll be able to see our detailed results for the week. But as we look at the market right now, I'm taking a look at the E-mini futures contracts here, selling off again pretty heavily, going into the almost down 90 points right now on the E-minis. 3,900, the 3,900 level was a really big level right here, sort of this red area right in here. That 3,900 level was a huge area of support for the marketplace on Thursday and Friday. It held quite nicely, even though we had a big sell-off on Friday, and we have just absolutely blown through that here this morning. As I speak right now, probably 2 hours before the cash open on Monday morning, we're down almost to 3,800, almost a 90-point sell-off from that level. So technicals, the interesting thing here, as I look at the marketplace, is that technicals don't really particularly look that oversold. So it's implying to me that there is still a lot of potential downside here in the marketplace. You know, even if we are in a bear market, you have snapbacks, and that usually happens when we get into a oversold position or overextended to the downside. Our technicals aren't showing that quite yet. So we've got 3,900 still as Friday's floor, but we've broken through it this morning. 3,860 would be the next level down. We've blown through that one. And so now we're down looking around 3,970, which is, 3,790. 3,790, which is not very far away. It's just only about 20 points away from where the E-minis are sitting right now. So 3,970, 3,790, I'll get that right. 3,790, which is just about 20 points away from where we are. 3,735 and 3,720, but none. Folks, I will tell you, 3,790, 3,735, 3,720, none of those levels are really strong levels. They're there, they're in there, but they're not very strong. A whole lot more of a vacuum to the downside than to the upside. Now, on the upside resistance, well, we've still got that 3,900 level. If the bulls want to try to do anything here today, and I do believe, as ugly as Thursday and Friday were, as ugly as the pre-market looks right now, and due to the fact, obviously, too, that we've got FOMC on Wednesday, and now we are absolutely, we've gone very, very quickly from talking about just a few quarter point raises here and there to every single Fed meeting a quarter point raise, to now it looks like every Fed meeting is going to be a half point raise. Well, now we're talking about this Wednesday, do we get a 3/4 point raise? And so all of that negativity, I still think there is a chance this week that we get some oversold signals and we get a snapback at some point in the week. I don't think necessarily means we're going to get a change of direction here, but I am looking for that. But for that to happen, first of all, the bulls, they need to get above 3,900 and then 3,930 and then ultimately 3,975. And if they could get above 4,000, that puts us really back into that trajectory now where we're starting to move up. But again, 3,900 is the first sort of mountain that the E-minis need to climb. Man, goodness, that's almost 93 points from where we're at right now. So it does definitely look like the bears are in charge right now of the marketplace. If we look at our monthly sector rotation, again, it is still the same areas that we were looking at here. As we get through the month of June, we'll be able to roll this out and see again where activity is laying. But most of the areas in the market right now are starting to really get hammered. Again, this is updated only once a month. And so it's not really reflecting the massive moves that we have had here in the last, I'm going to count today's trading day, the pre-market. So Thursday, Friday, and today's moves, those have been some pretty massive moves, moving us out of more of a neutral trend to a just definitive downtrend once again. You look at our heat map on a weekly basis. Again, this is a little bit bigger picture than we tend to usually look at in our trading room, where we use a daily heat map to see where the daily market activity was. You can see that 2 weeks ago, it wasn't really that bad. It was sort of a healthy mixed market. Well, last week it was ugly once again, with, of course, just a few exceptions here and there, mostly in energy. But it was an ugly, ugly week. Looks like, again, we're going to start that off again this week in the ugly category. Big, massive sell-off in the NASDAQ this past week. Down 7 points, or excuse me, down 7 percentage points almost in a 2-week period of time. This was 2 weeks ago. This was last week's result. So it's going to be interesting to see. We've got a lot of trades that we put on today, on Monday, in anticipation of taking them off on Friday. These are weekly trades, and we're going to need to be a little cautious today as we get into those. Obviously, I'm jumping ahead here. We'll get into that in just a second, but it does look like we're in for another volatile week. We look at the put-call ratio. Again, it's a sentiment gauge. It helps us understand, what the sentiment in the market is. Is it more bullish or is it bearish? And again, that put-call ratio is above 1 when put volume is greater than call volume, and it's below 1 when call volume exceeds put volume. So in other words, when that ratio is high and levels are accessible, in other words, when we gauge market sentiment, sentiment's deemed bearish when the ratio is high and bullish when the ratio is low. What are people buying? Are they buying puts or are they buying calls? Well, it's interesting as you look at the marketplace. There's actually a couple things that make me pretty darn excited going into this week. We had talked about last week, we had 2 days when we were in that big, massive consolidating triangle of inside candles. I mean, it wasn't just that we were, going nowhere in the marketplace. It's that day after day after day, they're just inside candles of just, a spring getting wound up tighter and tighter and tighter. We had 2 of the lowest volume trading days of the year, which definitely does not help us as 0 DTE traders. We need that IV. We need that volatility, and we need the volume in the marketplace to get that. Well, last week was definitely an improvement over that. You can see that the put-call ratio has gone up from where we were. This is 2 weeks ago. This is where we ended the week last week at. So we definitely are back solidly above a 1 here on the total put-call ratio. Means that, again, we've got a little bit more put action than call action going on. But the big thing that I really am excited about, you can see total volume right here 2 weeks ago versus volume last week. We're back, baby. We are back to some actual real volume and activity, and that should just do nothing but help us. So pretty darn excited about that. We look at the open interest chart for the S&P. We did finish up the week around 3,900. We're looking to sell off almost 90 points from that here at the open. But nevertheless, you can see that 4,000 wall, again, is continuing to be very, very strong. You can see that, again, we've got that skew to the put side. Now, that's important for us because, our whole idea or approach or strategy with the 0 DTE is that ideally we want to enter our trades by scaling, starting on one side of the trade and then working into the other side of the trade. And we generally want to do it on the strong side, what we call the strong side, which means that, if the market is trending up, we would sell puts. If the market's trending down, we would sell calls so that we get a little delta help right along with our theta trade. But that problem that has created as of late is that the market is been just trending down for the last 3 or 4 days. And in that downtrend, the premium has been on the put side. So we have kind of been forced on a couple of these occasions to start on what we would term the weak side of the trade. And that just takes a lot more discipline because we have to be patient. We have to sit on our hands and wait for that activity to happen. But you can see that there's a lot of activity going on right here now. 3790, that 3800 level, that's the sort of right just below where we're sitting right now. And then we go down to the 3700 level. So you can see, we're already down 90 points on the futures right now. And there's a lot of activity down here at 3700, which is another 100 points down. There's a lot of hedging and activity going on well below the prices that we are sitting at today. So we'll have to see how that pans out this week, again, with a lot of news items. Obviously, some good news for us as well. Last week's expected move was 101 points. We had zero movement. We had zero movement going into Thursday's session. In other words, we'd gone up and we'd gone down, but we basically just canceled each other out. by Wednesday, and it was Thursday and Friday that we ended up getting pretty much that whole move and then some. This week we were back up on the volatility scale. That's a better number for us. 131 points of an expected move. That should give us some premium to work with here. And then obviously FOMC is going to bring in some premium. So you never know what our results are going to be. There's no guarantees in trading, but all you can ask for is a perfect environment. And I think that's what we get this week, is we get a really, really strong environment to build our trades in. If we look at the S&P heat map, you can see we're back again here at this really big demarcation point where, you know, number one, almost every indicator. I like the RSI with Bollinger Band indicator. You know, you can see that we are not. We're in sell mode here. RSI is absolutely in sell mode, but it also is nowhere near indicating that we are oversold. MACD is going into sell mode, not even close to implying that we are oversold here. And stochastic has already gone into sell mode, and it's not even close. So nothing that we look at, technically speaking, says that we're even close to being oversold here or due for a bounce. And yet we're sitting sort of on this precipice here that if we break down below that, yeah, there's some levels below. I gave you some levels below. 37.90, 37.35, 37.20. But man, they're not very strong levels to the downside. So we'll just have to see how it starts to play out this week. It certainly doesn't look like it's going to be a very bullish day today. We look at the fear and greed sentiment reading. It kind of gives us an idea. You know, the thing where we hear so much in the market is, well, there's no capitulation. You know, we can't have a bottom in the marketplace unless you have capitulation, and you get that sometimes with the fear and greed index. It is a contrarian indicator. When we're down here at these extreme fear levels, you know, I would say, you know, well below 20, you think that would be a buying opportunity, but we haven't really had that capitulation. We've dipped into the extreme fear range. You can see that a month ago we were quite a bit into the extreme fear range, and it's really just sort of leveled out here. We don't see a whole lot of, you know, just panic happening right now in the marketplace, especially based on the moves that we've had. Now the VIX has popped a little bit here. There's Thursday, Friday, and this morning's session. You can see the VIX is popping a little bit here, but again, that's not a big move. That's really not a big move for the VIX. So we'll have to see how that continues to play out. We've been shorting volatility for quite some time inside of our AST program, and that's actually worked out quite well for us. Items on my watch list for this week, I'm just going to throw out a few tickers to you guys that are tickers that maybe you are not familiar with, or maybe you haven't traded before. These are not what I would call name brand stocks. They're sort of offbeat stocks that I have just found some support resistance areas at to maybe put on your watch list and see if you can find some support or to buy these at, or resistance to short them at. But I think they're interesting names that have some potential for movement. So check them out if you have a time that you're just looking for trade ideas. A couple other things that we need to focus on is obviously today, Monday, we've got Bernard speaking 2 hours prior to the cash close. That can be a market moving news item. We'll have to see how that goes. Now today obviously is Monday. It's a busy day for us. We start off obviously with the 0 DTE, but we also have our IWM weekly credit strangles, our 4 DTE SPY and Q trades that we do. We're going to have to talk about that a little bit here in the trading room. We've got some pretty good movement here already in the futures, as I've mentioned several times, and in all likelihood we're going to probably want to take these trades off Wednesday morning, or at least Wednesday afternoon, before the FOMC minutes come out. And I don't know, one of the things that requires of us is that we'll need to enter both sides of the trade. We'll need to do full iron condors on these. And number two, sometimes we get to Wednesday and it's just not enough time. and we were not able to pull them out at a profit. So we'll have to see what the setups give us today. Generally, this is just a given that we would put these trades on here today, but we might need to talk about it in the trading room and maybe belay those trades until Wednesday afternoon after the Fed has made their announcement. We had a nice oil trade last week that we had carried over from the previous week. We used the USO to trade that, and we were able to book a profit on that on Friday. So we're due for another oil trade this week. Now, unfortunately, we sort of got caught in that USO oil trade that we rolled for 2 weeks, and we missed a nice little 2-week window opportunity to use the futures, the CL contracts, which we generally prefer to do, but they only have monthly expirations, and so we just didn't have an opportunity to do that. We've got 2 days left in the current CL futures contract expiration cycle for the options, and so we're going to take advantage of that today, and we're going to put on a oil trade today that will expire again in 2 days. So that's what's on the agenda today. We are going to look at another overnight trade. We'll probably be looking at those every single day this week, except for Friday. Just have to see how it pans out for us and what the market shows us. It's got to obviously make sense, but it's something that's going to be on our radar. On Tuesday, our trading activity, well, we've got PPI numbers coming out both year over year and month over month, just about an hour prior to cash open. That can be market moving. We were going to have a 0 DTE on Tuesday, and again, remember on Tuesday we trade our 0 DTEs a little differently. We start with either a butterfly or a broken wing butterfly, and it's a relatively low capital commitment, and it's very asymmetric in nature. It could give us a 3 to 10 times return if it hits the tent properly, or if it even is close. And then if that doesn't work, if it doesn't look like that's going to work, then we'll do an overlay on top of it. But the Tuesday, Thursday 0 DTE sessions are meant to be a lot less stressful, a lot easier to manage, something that you don't have to be staring, hopefully, at your screen all day long with. We're also going to be working on ratioing our pairs trades. We had that on the schedule for last week, and I had COVID, and I was just mentally not there, guys. Apologize for that. And then, of course, we'll be in the scalping room with the live Zoom feed all day on Tuesday scalping. And kind of hopeful for this week. Hopefully we get some volatility that we can scalp with this week. Again, we'll look for a 1 DTE overnight index trade. If it's there, we'll take it. Wednesday, activity-wise, we got oil inventory numbers coming out. Our CL trade should expire here this day, and we should be able to open up a brand new trade with that using the USO. We've got retail sales, obviously, FOMC, and then Powell's press conference coming out. So we'll obviously try to get a 0 DTE in early in the morning. Sometimes that's possible, sometimes it's not. We've been pretty darn successful at that, but we'll have to see how the day goes. But the thing that the FOMC gives us is this potential to double dip on the 0 DTE. Try to get one in on the morning, or maybe it's a situation where we have the 1 DTE, the 1 date expiration overnight trade that we put on Tuesday, and we can clean that up a little bit, or maybe add to that a little bit on Wednesday, end up taking that trade off and then starting with another one. So again, I'm not really sure, until the very end of each day whether an overnight trade makes sense for us. But if it did, this would be a perfect day for that to take place. Usually we don't get too much overnight movement prior to the Feds. It's usually sort of a moribund, sort of stale market while we wait for that news to come out. But you just never know. So we'll have to see at the close. But we will look to double dip on Wednesday if we can. We'll put a new oil trade together as well. And then we'll look to initiate another overnight index trade. That one should be an interesting one with the volatility that we can get going into the close on an FOMC day. So that one could be a nice potential trade for us. Thursday, we've got jobless claims coming out. Housing starts as well. We've got all of our commodity softs and nat gas reporting. Now, We still have our soybean trade going, and we still have our nat gas trade going. So those are going to be numbers that can impact us. We'll want to look for those in the morning and see if potentially we want to make any adjustments to our trades. I think that we've probably done as much as we can with both of those trades right now, our nat gas trade and our soybean trade, but we'll have to see how those numbers affect them. Thursday, again, we'll be starting another 0DTE with the butterfly, sort of a low stress, low maintenance, easier approach to our trading 0DTE days. And then if that doesn't work, we'll do an overlay on top of it to try to bring that back into the profit zone. We'll be scalping all day long in the live Zoom feed, and I'm going to take a look again on Thursday at whether or not, it just depends on what price action we get from Wednesday's market, whether or not some swing trades or just pure scalping trades make sense, but probably be doing a little bit of both, I would imagine, on Thursday in the scalping room. And then once again, we'll look for an overnight index trade if we can get one in that makes sense near the close. Friday, we've got industrial production numbers coming out just before the cash open, and we're just going to try to get a 0DT. Most of us are wiped by the end of the week, and that's all we're looking for is another index trade on the 0DTE strategy. So that's kind of where we're at for the week. Should be a good one. I mean, all we ever look for is really potential, and that should be there for us this week. It's going to be up to us to execute. We've had 70 days of 0DTE opportunities this year. If you look at our updated results here, that's 114 total trades that we've taken. 111 of them were winners, 3 were losers. Remember, folks, that in the live trading room, when you're in the room, you just go to the top of Discord and you hit the pin, and you can get a download of every single one of our live trading Zoom sessions, and you can review them if you want to see how we did a certain trade, or if you missed a day when we had to do a bunch of adjustments and you want to kind of see how that worked out. All recorded there for you. Our 4DTE trades, we had 2 more winners last week, so that pushes us to 82 wins and 7 losses there. Those have been really good for us. Our IWM weekly credit strangles have been nothing but magical, just absolutely wonderful. Can't say enough good about the IWM weekly credit strangles. I hope that we can find a decent entry for one of those here today and not need to wait until Wednesday. But it's been a great trade for us. Pairs trades, we still have 3 pairs trades open. We've got one of them that we probably could have booked a profit on Thursday or Friday of last week. And I was just so bound up with COVID that we just didn't get around to doing it. But we'll work on those on Tuesday of this week and see if we can get a couple of those pushed into the profit zone and get them locked in. Our bear market trades, we do have one still open. It's working well, and it just needs more time. It's a little bit more time to cook. I think we've got about 3 weeks still left in that trade. Our Tuesday, Thursday butterflies, again, I do break those out separately than our 0DTE strategy up here because we do approach them in a little bit different manner. We have had 11 total trades this year. We've done of the 11. All of them have been winners. Last week's trades were not necessarily home runs, but they were solid. They were good, solid trades in a week that I thought was going to present some issues for us, and so I'm pretty darn thankful for the returns that we did get there on those. Scalping results. I scalped quite a bit last week. We had on Friday, we had the CPI numbers coming out, and that was a great opportunity that I just couldn't follow through on because I was just sick as a dog with COVID. Thursday, I had no business being in the marketplace. I don't even know what I was doing, if I was even pushing the right buttons. And so I wisely, I put in a trade and immediately lost and immediately stopped, which was probably the smartest thing that I did on Thursday. Tuesday and Wednesday, I was carrying over swing trades. And those swing trades really were my salvation last week in scalping. Obviously, as we had a big dump get into the end of the week there, or the latter part of the week, it really helped out my short positions there that I was swing trading. I was covering them with puts, bringing in income off of them, and that ended up okay. So it was a pretty darn good week from scalping, but it could have been amazing if I had a clear head and could have just focused in a little bit better. But scalping, man, you need to not have anything else on your plate, and you need to be in the right frame of mind to make that darn thing work. Our AST program, our Asymmetric Trading System program, has just been phenomenal. I mentioned this in our weekly review video. I'm not really sure how to figure out our outperformance of the marketplace here from a percentage standpoint. Obviously, if the market is up 5% in a year and we are up 10%, that's pretty easy, right? We've doubled the market return. And it's a pretty simple percentage to figure out. But when the market is down 22% and we're up, how do you calculate that outperformance? I mean, it's I don't understand really the math, and I've seen it done a couple of different ways. But the bottom line, I guess, is that we're making money in the AST program, and we're doing it at about 75% less risk. So it's just been, I didn't think that we would have an opportunity in 2022 to really top what we accomplished in 2021 in terms of outperforming the market. We almost doubled the market return at 65% less. Well, we're doing way better than that this year, and we're doing it at about 77% less volatility, less risk. So you just simply, you're not going to find better passive investing portfolio asset allocation, I believe. It's just absolutely phenomenal. Last year, there were only 2 hedge funds that were publicly quoted. There were only 2 hedge funds in the world last year that beat our results. And I got to think, I haven't seen any numbers for this year, but I got to believe that with us doing better this year than we did last year, that it should be a pretty impressive result for us once again, just in terms of what's available out there. But that's where we're at. Dragonflies, we are starting to load these up now. This is a fairly new trade for us to start documenting dragonflies and double diagonals. We've got one of each going on right now. We've got a dragonfly on GME, and we've got a double diagonal on, I think, MCK, that we had a lot of that trade expire very nicely profitable for us last week. And we need to work on that again today, rebuilding some of the aspects of that trade. So that's where we're at overall, folks. Bonus trading gift for you guys this week. I got something pretty cool for you. So you guys know that I'm a contributing editor to Financial Juice. And so I've got a beta test for you guys that you can access called Unusual Activity, where you can get in and you can actually see, volume changes and activity changes. You can find almost immediately where the action is in the market. This is a beta test that we are rolling out, and I will put the link for the software program for you to download for free into the bonus training channel for you guys in Discord, and download it, use it, play around with it, see what you think of it. But it should be a powerful tool to help you be able to pinpoint every day at any given time where the activity in the market is. So pretty cool idea from them. Check it out. Contacting me, I always love to hear from you guys, whether it's on Twitter or just commenting on the YouTube channel. But it's always great to hear from you guys. If you need to contact me, please do so. I do love hearing from you. Always want to give you guys thanks again. Man, last week was a tough week for me. I'm really grateful that I can make a living in front of my computer, pushing buttons all day long, and I didn't have to go to a job or get in the car and go into an office someplace and do all of the things that so many people are forced to do. But boy, it was a tough week to drag myself out of bed, and didn't get much. Didn't change my clothes out of my pajamas very much last week. Let's put it that way. But I appreciate all your guys' support. You guys have always been awesome for me. If you are not part of our trading room and you want to check it out, guys, I've got an absolute no risk guarantee for you that I don't think you'll find anywhere else. You can go ahead and join our trading room for no cost, no obligation for a full week. You can check it out. You can chat with us. You can look at our trades and you can see how we trade and you can see the daily results. And then if you like it, you can sign up for a month. And if you don't like the month, if it's not what I say it is, I'll give you double your money back on that first month's subscription. Now there is some requirements that come with that. I'll click a link down here below for you to get access to the program for free for a week, or you can look at what the requirements are to get a double your money back guarantee. But anybody that has a program, I think, that's worthwhile should be proud enough of it to give you free access so that you can judge for yourself. So check those links out below. I look forward to seeing you guys in the trading room here in about an hour or so. So it's coming up quick. Take care, guys. See you soon.